Good morning and welcome to the XM.com weekly market update. And joining me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Welcome back.
Thank you.
China. We've touched on China the last few weeks actually.
Yes.
There's a whole range of numbers and stimulus packages. The CPI number came out for the last month, 0.
Yep.
Which was down. The numbers there aren't great.
No, they're not.
And we'll look at the PPI number shortly as well. But I think the stimulus was good. It was well received. That's now the markets have come back a little bit since then because there hasn't been a huge amount of follow-up at this stage. But I guess, like any stimulus, it's a bit of a sugar hit.
Yeah, exactly. Well, when you're looking at the CSI 300, I think it's up the best part of 25% in the month. China next, that index is up 40% for the month. The numbers coming out over the weekend, there's still a sense of fogginess regarding what exactly is the finance minister prepared to do and how quick and what's the timeline and how big is there going to have to be a bazooka sometime in November or December to try and really get traction. And we all understand the property overhang. We appreciate the deflationary side of things as far as weakness from global consumption. And there are so many factors that are playing out. Anyway, hopefully our slides will, here we go.
Yeah, well, the PPI,
play into it.
Yeah, well, that's now 2 years of negative numbers, which is pretty extraordinary, really.
Yes.
Coming out of a country like China. And the export numbers came out overnight.
Weak.
Extremely weak.
Yes.
So there's still plenty of issues over there, and the government will hopefully work their way through it, but have they got the ability to get the outcome they need?
Or take on debt. And this is the issue. That really demonstrates, I think, that chart, global weakness for the Chinese finished product, and it's a deflationary, I suppose, experience that they're living through, and this is the challenge. How do they get out of that? And as you know, that really rolls into a stagflationary environment where we've got low inflation, but when you've got a deflationary side of events, this is not a good position to find themselves in.
No, and we sort of see, we had like the US CPI numbers out last week, they're only down very slightly, so it's more or less the same as what it was. But inflation around the world has been coming down quite a bit. So obviously the focus, I don't think anymore is on inflation so much. They seem to have tamed that through these higher interest rates. But as you say, you don't want to move into a full-on deflationary environment either.
Oh, no, certainly not the likes of China. How do they get out? And you've got such a huge work, employment base, and millions of unemployed youth. The issue here in the States, whilst that's good, and you can't argue with that, are we going to see on the 7th of November, 2 days after the election, there are 3 camps. There's 50 basis point cut. We know there's no cut in October. So there's 50 basis point in. Is that going to be the first part? Is it going to be 25? And there's now being challenged, do we really need any form of cut? So, that leads us to what happens by the end of the year. It's all been penciled in. There's 75 worth of basis points worth of cuts to come through by the end of the year. It's being challenged by many authorities that everyone's got an opinion, but it may be even 0.
Yeah, which wouldn't surprise me considering because the US economy is in pretty good shape.
Yes.
So they've handled interest rates at 50 basis points higher for a few years now.
Yes, they have.
And the economy's held up extremely well.
Yes.
So, which is a good position for them to be in, where if they don't need to cut, then don't cut.
Don't cut. It's what we're noticing is, from a CFO perspective, a lot of big corporates are now really downsizing. I know that Boeing was under some pressure, but to wipe 17,000 off their headcount is a pretty a pretty big axe to swing. And there's been, while we see that US jobless claims, that's certainly spiking, but the government has been the major employer across the whole nation under the if you're calling it a socialist government under Kamala Harris and Biden. So we've experienced that big push up as far as government employees, and this is going to be interesting. Should a Trump administration get in, Elon Musk has been given a task to take an axe to government jobs. So we're really in a very interesting play at the moment, and how this is all going to materialise over the next couple of months.
Yeah, for sure. And US dollar index, nice little rally in the last sort of two to 3 weeks.
It's been incredible, Andrew, for our traders. You know, we've had, as it shows there, it was just on 100. Now it's at 103.22, and boy, oh boy, it's just been showtime, and there's every chance you get even a further cutback as far as European Central Bank this week with 25 basis points of rate cut. So that dollar index is weighted at about 61% euro. There's every chance you could see a mid 103, maybe even crunch up to 104. So yeah, currency trading has been dynamic in the last couple of weeks.
Yeah, plenty going on there.
Yeah.
Finally, gold, not quite at all-time highs, but very close to it.
You betcha, Andrew. I mean, you know, a couple of things. The S&P 500, you're going to love this, is 32% up for the year annualised, which is just extraordinary. Gold's 42% and 14% uplift in Q3. So, you know, you can't dispute the numbers. And when you're rolling your eyes across there at 2,300 for the start of July and now running nearly at 2,700, it's just, showtime that last quarter. And I'm expecting this quarter to possibly continue that momentum to the upside.
Yeah, well, it looks that way in the equity markets as well. Like we've got obviously in earnings season now, some of the banks reported last week, pretty good numbers again, and the banks are a fairly good bellwether for the economy because they're right next to the consumer.
Oh, exactly.
So we've got the other big banks coming out today, sort of US time. So, but you know, gold's up, equity markets are up very strongly. Will we get
and now dollar up?
Will we get some pullback in the next month or so? Like historically, October is a weak month, but you know, last night was another.
Oh, it was very strong.
Night.
Yeah, from US equity standpoint, I thought it was very strong. And, you know, you just can't argue. You just see green. I look at it first thing in the morning, you know, around about 5 a.m. and you look at Dow Jones, S&P and NASDAQ and just green. It was showtime.
Well, it is. And you sort of think there's still a ton of money in cash and fixed income as well.
Look, was getting 5%.
Yeah, I know, but you sort of think,
yeah, it's
like
got to find a home.
Something's got to give.
Yeah, I mean that Nasdaq was up 0.87, which was that's 18,500 now, and the S&P. We were talking. It wasn't that long ago. We said, I might hit 5,000. Well, it's at 5,900 now. It's every chance you're going to hit 6,000.
I know. It's
and Dow through 43,000.
Solid.
They're big numbers.
They are. Yeah.
You keep on telling me, and I keep on looking, and they keep on showing green lights.
Get invested. Stay invested.
Yes.
And be patient.
Be patient.
If there's a pullback,
buy more.
Buy more.
Yeah.
As long as you're invested in quality. If you're in these little speckies, these penny dreadfuls, you'll do your money.
Yes.
But if you're in quality companies and they pull back 5, well not 5, if they pull back 10, 15, 20%, then you're getting something 20% cheaper.
Yes.
There's a good chance it'll get to another all-time high. It might be 12 months away or 18 months away.
Yes, but it'll happen.
But it'll happen. So yeah, patience. It's nice to have, but very few have it.
Yeah, that's the key to investing in a lot of ways. Yeah, and don't be leverage up too much from a trading perspective. Don't dial in too much leverage. No. The markets are open tomorrow; they're not shut, and the next day they'll be open. So don't get too greedy.
Yes, leverage can bring you undone very quickly.
Yes. If you get, it can gallop away from you. It can be very advantageous, but don't be too greedy.
Yeah. All right, we've got some numbers coming out later in the week. The ECB got a problem, most likely another interest rate cut.
Yep.
We've got some GDP numbers and inflation numbers coming out. I think Canada and the UK, I think.
Yes, so, UK. Yep.
Canada.
I think also the Kiwis, I think they might have some numbers coming out.
Okay.
So it's, again, retail sales for the States, and you've got the PMI numbers. I think they're coming out of the States for Philadelphia and New York.
Okay.
Or manufacturing.
All right. There's always plenty going on, and obviously, as we said, in the middle of the earnings season now as well.
Yep.
So it'll be interesting to see what some of the big companies come out with.
Yeah, and 3 weeks today is the election.
Yeah, I know. Yeah, it sort of crept up on you.
Boy,
I think because there's so much going on in the world, there hasn't been all the focus just on the election sort of thing. So it's obviously you can keep an eye on it, but there's plenty of other things to keep us busy.
No doubting that.
All right. Well, thanks for coming in. We'll catch up next week.
I'll look forward to it.
Thanks, mate.
Cheers, Andrew.
And that's the XM.com weekly market update.